The stock of the day is brought to you by HYGG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at HYGG.com.
Stock of the day is Kelsian. Share price rallying today. This is after the bus and ferry operator said it is looking to sell its entire tourism business to streamline and reduce debt. The tourism business, recording more than $160 million in revenue in FY24. It currently includes Kagari Resorts, its SeaLink cruising businesses in Sydney, Whitsundays, Adelaide, WA, Tasmania and the Northern Territory. The chair saying the divestment of the tourism portfolio will see Kelsian emerge as a more infrastructure-like commuter and contracted business, allowing us to focus on delivering essential journeys through marine, bus and motor coach transport. Many of the continuing businesses are underpinned by defensive, long-term government-backed service contracts. Kelsian has said its FY25 earnings guidance of around $290 million should not be impacted by the decision. Does this make sense? Henry?
Well, I guess it makes sense from simplifying Kelsian's portfolio of assets. They've got, I think it was about $160 million in revenue from these assets, and a lot of them, as Kelsian rightly points out, are sort of government-backed to some extent. But this started out as a tourism operator in some respects, and then branched out buying All Aboard America and various other assets overseas. And you could argue, I guess, that this is a bit of a jewel in the crown. It is designed to reduce debt, simplify the portfolio. But, is it the deck chairs on the lifeboat? I don't know. The recent results weren't particularly good. We did get some bus weakness internationally. There were some issues with the bankruptcy of one of its players out there. The market has risen, 5% today, so that there is a little bit of a positive attitude towards this because it would reduce that debt profile. But, there's a lot going on with this company. We've got a new CEO in terms of the company. I can't get too excited as yet. At the end of the day, this is still an asset. Who's going to buy it? That's the question. And I guess, will they get FIRB approval? Those government contracts, there would be some sensitivity around them. And I think the last set of results were underwhelming. You've suffered a lot of pain in this stock in the last year or so. It was $5. Now it's halved that price. We are seeing a little blip today, but this process is going to take a while. It's not an easy asset. And obviously a lot of it is geared to tourism, but the company wants to kind of, I guess, steer its way towards those bus assets and also, assets that are not so geared, I guess, to the tourist dollar. So, yeah, it's not one that I had on my radar. It's still not really on my radar. I suspect the bounce will be short-lived and this will take some time. If you're already a Kelsian shareholder, sorry for your loss. But at the end of the day, I think this is just going to keep going a bit sideways until we get more information on this sale. I could get a really big price for it, who knows? But for the time being, debt is the issue and the businesses are underperforming, I think.
All right. So, if you're there, would you hold on or just move on, sell it, look at something else?
Well, this is a bit of a little bit of light at the end of the tunnel. So maybe you'd hold on for the time being to see what transpires. But it has not been a great success story in hindsight. The American bus operation hasn't performed as well as they thought, and now here they are selling off the assets, which is kind of where they started. This used to be called, I think it used to be called SeaLink from memory.
Yeah. Well, yeah, that's when so much it's a lot of its businesses are SeaLink. So that's a less than enthusiastic hold from Henry. Andrew, what do you think? Are you seeing a potential turnaround here?
No, I'm not. The last time we covered this was, I covered this anyway, was back in March 2023. And at the time, they just made that All Aboard America acquisition at $5.55. And I remember commenting that they did limited due diligence, using the air quotes for those on the podcasts. And we're now enjoying the fruits of that limited due diligence relating to the debt load, underperforming businesses, and to Henry's point, having to start selling off some of their marquee brands. Captain Cook Cruises, as an example, is going to go. The resorts up here in Queensland are going to go. And it's good timing, isn't it? Now's the time that people want to be sort of buying discretionary assets, isn't it? We just said, it's a great economic environment. Why wouldn't you sell them now? So, yeah, you sort of have to question management on a couple of fronts. How did they get themselves into this position, and is this the most appropriate response? I mean, I absolutely get the need to reduce debt. I get the fact of focusing on government contracts and all that sort of stuff, but yeah, their timing is not great. So, and today's relief rally is probably more short covering more than anything, because the short interest that people betting that the share price is going to fall has actually been rising. So I suspect there's a little bit of short covering going on today. I've got no interest in this, Andrew. If you're lucky enough to be holding it, to Henry's point, I'm sorry, it's not a sell. Why would you crystallise a 51% loss over the last 12 months or 24% per annum loss over the last 3 years? But it's just going to go sideways for a bit. There's certainly money to be made in other places. This is not one of them.
Well, that's certainly a negative way of looking at it, despite the fact that being a double hold if you're there. Well, we've heard apologies from both. That is our stock of the day, Kelsian.
The stock of the day was brought to you by HYGG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at HYGG.com.